Welcome back. You've been watching Crystal Ball. I'm in conversation with Madhu Kela of Reliance Capital. Global volatility will be a part of life this year, but even given that, is your expectation that we've put in a bottom at 6,800, 6,900? I mean, none of us can predict indices accurately all the time, but what is your expectation?
See, this is all, again, if you ask me what is my gut, my gut is that maybe we have seen the worst. Maybe we have put some kind of a bottom for 16, 17 in place. That 68, 6900 looks very, very difficult to get penetrated unless and until we see some real bad global chaos, because at the margin, what gives me a lot of confidence, which I spoke to you in detail, all this cleanup which has happened had its own toll on the domestic earnings, on the domestic recovery. That seems to be behind us, and those are the things which are becoming, rather than it being a headwind, it is becoming a tailwind. So, even if you have a global turbulence, but if the domestic factors are looking far more constructive and far more positive, so I would say in a situation which is visible today, very, very difficult to see how we will penetrate 6,800 in this year.
What's your earliest expectation of when we can take that 9,000 level on the Nifty out? I won't hold you to it. It's a mug's game, we know, predicting all these indices, particularly in the environment that we live in. But again, what's your gut feel?
In the next 24 months, for sure.
Okay. I thought you would compress that number a little bit, but fair enough. You've played
but
you
are asking me for a wide range, even though you will not hold me, but I have to hold my own self.
Sure. No, fair enough.
Yeah.
What is going on with commodities, Madhu? Because, what worries a lot of people in the market is this volatility in oil. And we are almost directly correlated with the price of oil. That collapsed, our market collapsed. That has bounced back. All emerging markets, including ours, have bounced back. Do you see oil stabilizing, or do you think it will lead the next shock in global financial markets again?
Udayan, so that's the call which we took. In fact, for the first time I tweeted when the oil prices went down to $25, $27. See, we have to recognize that, there is a lot of noise around. But sub-30 levels, 30% of the global capacity becomes redundant because of the cost of production itself is higher than $30. Now you can carry on for some time, but you cannot keep, and a lot of these companies are private companies which are producing oil. So our view is that sustainably to see oil below $30 for a period of time is very, very difficult. Again, as we discussed, in the short term, anything can happen. And the second thing is that, the overall oil demand and supply imbalance is 1 or 2 million barrels. So for the countries, there is so much stake in the world vis-a-vis oil prices. For these people to agree when the position becomes so aggravated to cut the production or to normalize production by 1 or 2 million barrels per day, that should not be a great deal of effort. So I think what we have seen in terms of oil prices, the bottom, again, vis-a-vis the market, I have a very, very high degree of conviction, but oil prices are unlikely to go below $30 and sustain there. Again, it can happen for a period of time, but very unlikely to sustain there.
You talked to a lot of global fund managers as well, Madhu, and we spoke about the fact that in March a lot of the FII money has come back. Do you get the sense that this is India funds or emerging market funds which have got most of the money? Could it be a lot of ETF money which was playing for the emerging market bounce back? What's your sense of this money that generally emerging markets and India in particular has got over the last 1 month?
So my interaction, Udayan, is that this is more of an allocation money. It doesn't look like a lot of India funds, specific India funds have got this money. This looks like a larger global emerging market call, and within that India's position clearly being more superior. And having seen the correction which we saw, I think all these factors have come together for this money to be poured into India. But if you see, there was so much fear owing to global outflows, but it took them 8 months, I repeat again, to take out 45,000 crores. and it took them 1 month to get back 25,000 crores. And that is what gives me the conviction that whenever the world will stabilize and world starts to stabilize, India clearly is in the radar of global investors, and we will see more and more money coming. I'll just give you a small instance, Udayan. I was talking to one very, very large family office who have not invested in India at all. And they are wanting to make a case that they have seen Europe, they have seen US, they have seen a lot of developed markets, a lot of emerging markets, but somehow they have missed the India story and they want to be present here. So somehow, now these are players who have not come into India, and once they come in, they will be here for a relatively longer period of time. So I think global flows, unless there is again a chaos and big volatility, global flows I do not think will disappoint us in a normal environment.
Given these global difficulties that we are living in, Madhu, which scenario do you favor for the next 18 to 24 months? Do you see the market taking off and delivering returns at the index level like 2014? Or do you see a market which wades through all this difficult environment, which is not perfect right now, and therefore individual stock selection plays an important part in delivering returns, and you may not get superlative returns just from the index itself, because 2014 was a different kind of a year. You made so much money, whatever you bought. Do you see those kind of times coming back, or will we have to wait for a while before you get those kind of headline returns?
So I think, Udayan, the stock selection will be key. As we discussed, the overall index, whatever it has to do, it will do. But I would say if you choose your companies well, and you call this program perfectly a crystal ball. So wherever there is a clear earning growth, wherever there is a clear visibility of earnings, wherever there is entrepreneurs who are very sincere about ensuring that their balance sheets are put in order, I think those are the companies one would like to bet. Now, if the index is supportive, clearly these companies will make superior return than the index itself. And if by any global headwind or by any chance if the global factors are not very supportive, at least we will be able to hide behind these companies and not lose our capital. And in a good environment, again, these stocks will bounce back. So I would prefer the scenario number 2 which you described versus the scenario number 1, wherein we do a lot of work on individual stocks and invest in those companies with high degree of conviction, so that even if the index does not deliver good returns, at least we are in a good set of companies which will deliver good returns over a period of time.
In that context, how do you look at a sector like pharmaceuticals? I mean, it delivered such great or created so much wealth over a 4, 5, 10-year period. And suddenly, the last few months, everything seems to have gone wrong and the news is not getting any better. Has something structurally changed out there leading to this derating?
So 2 things, Udayan. I think, we discussed about it last time. So one, clearly, because I closed this sector, I track this sector myself personally very closely. So clearly the compliance from the US FDA has improved, and I think the industry as a whole in India is taking notice of that, and that is having its own impact, at least in the short term, vis-a-vis the stock prices. Secondly, we have had a very benign and a very favorable market for generics from India into the US market, wherein both in terms of, because US FDA was taking much longer than expected time to clear out the approvals, it has risen, it led to some kind of a significant price increase because of the artificial shortage which got created because of approval delays. Now we are seeing the approvals from US FDA are coming far more faster than what it used to take 1 or 2 years back. So the combination of these factors clearly are indicating that whatever P multiple which we gave to a lot of these large companies, they are definitely under a challenge. So if you are buying a pharma company 30 times, 35 times forward earning, then you have to be very careful. But the good news is a lot of these stocks have corrected, and now I can see opportunity, at least in some of these companies, not as a sector as a whole, but in some of these companies we can clearly see opportunities here.
Madhu, always a pleasure. Thank you very much for taking time out today.
you.